Hello and welcome. You're watching Closing Trades on ET Now. I'm Anisha Jain. With me, Saisha Faridi. And for now, the market is in a bit of a tizzy because the Nifty is testing 19,900. In fact, as we speak, we are below the mark of 19,900. Almost 15-20 days since we have seen that level. The broader markets too are sulking in the trading session today. Yes, it's a relative outperformance, but if you look at the advance decline ratio, they're all looking at more declines versus the advances. It's heavyweights which is dragging the index today. HDFC Bank, that stock is down by a good 4%. Reliance too has seen a cut of almost 2%. HDFC Bank, of course, after the negative surprise that came in from the analyst meet, has seen a bit of a downgrade come by from Nomura as well. Reliance Industries, there was large trade of almost 4,000 crore rupees. So those stocks are in focus, and together those stocks are adding almost 110 points on the downside. There's profit booking which is continuing in the continuing its profit booking that is witnessed in the PSU banking names today. So after that massive run up that we had seen over the last 10 days, today some of these stocks are coming under pressure. What's also crumbling a bit is cement as well as steel names. So JSW Steel, a sale, even the cement names like JK Cement, etc., they're coming under a bit of pressure. Having said that, it's power stocks which are holding up comfortably. So a power grid on account of that fundraise impending at the end of the month. SJVN, that 1.18 lakh crore worth of MOU being signed with PFC, and the ancillaries like Thermax are also in focus. India Wix has seen a bit of spike as well, almost 4% on an intraday basis. But ahead of that Fed decision which is lined up, Aisha, maybe the street is just being a bit more cautious.
Yes, cautious, and cautious more than the rest of the globe, I must say, because Asia, yes, some of the markets like Hong Kong, Japan, they were weak, but not as much as our markets for sure. And to be fair, Europe has actually started off well in the green. So across the board, you are seeing about 0.5% to about 0.6% kind of gains coming in. And even the pre-market US rates or the US futures right now are marginally in the green. Our markets, like Anisha said, thanks to heavyweights like HDFC Bank and Reliance, we're getting dragged down a fair bit. A bunch of other stocks aside of SJVN, which Anisha mentioned, Blue Star, there's a QIP of 1,000 crore rupees, floor price at 785. That's one stock which is in focus. And some of the tire names as well. Although you did see a bout of profit taking and sideways movement in the entire tire pack and continued to be alleviated concerns with regards to, crude prices escalating. But having said that, DAM Capital has initiated a coverage with a buy and a target of 315 on JK Tyre. That stock holding up 269 thereabouts is where that stock is. Bunch of other liquid movers. And AU Small Finance Bank is looking very smart. There's Polycap, 2.6% higher. That stock is looking good. There's Power Grid, Lalpath Labs, M&M Finance. These are a bunch of stocks which are fairly buoyant within the broader end of the market. But let's take it across to Kunal. Naresh, we've got Andrew Holland as well joining in on the show. Kunal, thanks to RIL and HDFC Bank, the Nifty is not. Do you see any rebound in HDFC Bank anytime soon?
Not really. I don't expect an immediate rebound. In fact, history has been, historical reference points has been indicated that whenever we've seen such a kind of a sharp breakdown on stock prices, whether it's on HDFC Bank or on a few large cap names, it's actually gone into a further sell-off or a corrective mode thereafter. We've seen that happening for many of the mid-cap names in the last maybe couple of weeks as well. So, which means that this could be a pattern which could get repeated for the most of the large-cap names. I don't expect HDFC to get into any immediate recovery. In fact, I think 1530 is the first level of strong support for the stock price, which means that there could be another drop of maybe 30 to 40 points before it tries to come back closer to its short-term support level.
Okay, so that's a take coming in on HDFC Bank, but let's just extend that argument to PSU banks as well. Naresh, what's your view? Is it the start of a reversal or just a one-day move?
I would say in the smaller names, it could be start of a major reversal wherein a short-term top could be in place and we could see a 10 to 15% decline in a lot of these names. But in the larger names, not really much. State Bank of India looks interesting. The stock has not even crossed the highs, unlike what has happened with the rest of the names. So over the last, say 1 year, it has made multiple attempts around 600, 620. And 550 has become a base. In the short term now, 580, 600 becomes a base. So if one is looking at a PSU bank sector, SBI seems to be the best bet. Canara Bank, Bank of Baroda, some bit of a dip given the rally. Same with PNB, which has gone up from 65 to almost closer to 80. So a 5%, 3 to 5% dip would be normal, and then one can look at it. But as of now, SBI looks interesting. but a strict avoid on the smaller names which have very, very low float.
Okay, we've got the Mirror Now Summit currently on in the state of Chhattisgarh in the city of Raipur. Let's cut across to that.
Yes, we have recognized the challenges on the ground and off the ground. Since there are few challenges which were unique to Chhattisgarh, like malaria and delivery of the healthcare system in the community health center and the primary health center. We have divided the challenges in different areas, like reaching to the mass and the public. For Bastar and Sarguja, malaria was the prime concern, and delivery of the health system for reaching the patient and bringing the patient to the healthcare delivery system. For Chhattisgarh, the healthcare system has not been reachable to these areas. So first we have addressed the system, bringing the patient to the hospitals and the healthcare delivery system. Our workers in far-flung area like Bastar and Sarguja have worked tremendously well to give the delivery system, and to my pleasure to give you appraisal that we have been able to eradicate malaria in Chhattisgarh and especially in Bastar and Sarguja very well, and it has come down to less than 1%. And for healthcare delivery system, we have been able to establish few district hospitals in the new district places, and up to 8 medical colleges. We have taken over 1 private medical college to the government fold, and we have established 3 new medical colleges, and we have been able to get the recognition of 3 another medical college which have suffered de-recognition due to lack of teachers.
Okay. डॉक्टर महेश सिन्हा, डॉक्टर गुप्ता ने मलेरिया की बात की, डेंगू भी एक बहुत बड़ी प्रॉब्लम रहा है छत्तीसगढ़ में. In that context, क्या प्रिवेंटिव हेल्थ केयर एफर्ट्स किए गए हैं, क्या मेजर्स लिए गए हैं छत्तीसगढ़ में इन टर्म्स ऑफ पब्लिक हेल्थ अवेयरनेस प्रोग्राम्स या फिर क्रिटिकल केयर जहां मलेरिया और डेंगू कंसर्न हो?
Dengue is a big problem in our country and across the state also. There are a lot of preventive measures are being taken, and the public is made aware of how to tackle with this problem. There is a seasonal issues actually. So everybody, most of the people must be knowing that we should not have a stagnant water, because that is the main source of the dengue spread, where these larvae and everything grows. So this because lot of diseases in our country, means even 90% of them can be tackled by the preventive, like malaria, dengue. All these are vector-borne, and all these diseases, water-borne diseases. If you can provide good drinking water to people, lot of they will be not there, and this will decrease the load on the health sector also, because these are smaller things. People have to go to doctor or to a primary health center, and we lose lot of man days, working man days across the country. It is not limited to the smaller places. And as we know, the Chhattisgarh is a difficult terrain, so it has its own health problems and how to tackle it. So the policy needs to focus on the area-wise. Although we have health taken care by the central and state government, but primarily it is the state government who has to take care of the health of the people.
Sir, स्पेसिफिकली नक्सल अफेक्टेड एरियाज में कितने चैलेंजेस आते हैं और कैसे हम हेल्थ केयर वहां तक पहुंचाते हैं अपने लोगों को? सर, डॉक्टर सर.
As you know, there are two problems. One is, as you said, the Naxal issue, and another is the difficult terrain. Both are combined, because that's why the Naxalism is there, because the administration is not able to reach. As the earlier our speakers said also, that there are areas where nobody has reached yet. It is a very strange, after so many years of independence, we have not reached to the last mile of the people. So if we have not reached there, we don't know what is happening there.
Okay, let's get back to the market action then. Still under pressure, about 200 odd points or so. We just spoke about HDFC Bank. Naresh, since you've been tracking Reliance for a while and betting on a recovery actually on RI, I just want to revisit the charts there.
So Reliance and HDFC have both been sideways, just testing the previous highs and then coming back again. So Reliance Industries today broke the recent swing lows of 2400. Now it goes back to the same zone 2300, 2350, which has been the last breakout point. So till the time it holds about 2350, there can be a slow and steady recovery, but the momentum is not great. But closer to 2350 is where one could take a buy with a small stop loss below 2320. HDFC Bank, on the other hand, has gone totally sideways. If you look at it, the stock is available at the same prices where it was in February 2021. So that's quite a long period of time where the stock has gone nowhere. And if you look at it, even in the near term in March, it made a low of 1530 levels. The stock was available at 1500 multiple times at this band only. So 1500 is a base. 1700, 1750 got tested 6-8 times over the last 2 years. Before the merger, as well as on the date of the merger, and over the last 4 months also. So it seems like it has gone into a long sideways period. And the problem about HDFC Bank is not the fact that the stock goes sideways. It is 14% of the Nifty 50. It's 28% of the Bank Nifty, which makes it trendless and becomes a problem in terms of momentum for the indices. So till the time we are at 1500 to 1700, this could remain a overhang for the indices to get momentum.
What's your sense on HDFC Bank? You think the market is fair in, punishing the stock? Yes, at the analyst day, they did talk about the NIMS guidance and they do expect a fall about 25 to 30 basis points, but that's largely on account of, the investments in Yes and Bandhan. Andrew?
So I think I think the market. Let me just talk about the market first, very quickly. It's been kind of getting into that overbought territory. So we always have some catalyst which brings it down, and maybe that's HDFC today. Obviously, I think the questions now go back to all the banks. Is there going to be a NIM compression? I don't think anyone has this answer. Everyone's saying no, it should be okay this quarter. And maybe it is, but I think going ahead, the street's now kind of scratching its head and saying, well, if this is what's happening with HDFC Bank, is this a problem for others as well? So I think that's, the broad brush kind of thinking on the banking sector. So, we've had some, it's been a nice rally in quite a lot of these banks recently, particularly the PSU banks. Maybe that's over in the short term, as we all now kind of think about the results going forward and the commentary from banks. Is it going to be as positive as people were hoping for?
A take coming in on HDFC Bank, but just shifting focus away from the banking space and talking about aviation, because there seems to be another crisis brewing in the airspace, and this one is specific to what's happening with Akasa Air, because there was a massive exodus of pilots that had happened. But what is the impact on the rest of the industry as well? Let's try and decode that with Mayur Milak, the Senior Vice President, Auto and Aviation at Asian Market Securities. Mayur, hi, thanks so much for making time and speaking with us. Well, first up, explain to us what happened at Akasa Air, why did it happen, and what's the possible options available for Akasa Air to go forward from here on?
Yeah, so I think from what we hear from reports and stuff from the CEO's message, clearly seems that there is a pilot issue. And this is definitely a big issue, at a time when you are at a fleet of 20 plus and you're looking to expand, and then if you do not have the necessary crew in place, it obviously creates a lot of havoc. And which I think they've clearly mentioned into their petition that they have cancelled about 600 flights in August. They are looking at another 600 cancellations in September. Doesn't ooze confidence in customers. The customer will have prime doubts into you are entering a prime season, and if you are on Akasa and that gets cancelled, then of course you have no choice. They do not reimburse you any which ways. So yes, this is a big issue for the airline.
This is also going to, in that sense, then weigh an unnecessary burden on the already completely burdened aviation space with practically just Interglobe Aviation out there. I mean, of course, you have Vistara, etc. as well.
Yeah, I think, so you are at a point where crude is rising. So naturally, the cost is expected to go up. Another supply, chain disruption through Akasa, where they've clearly mentioned that they are ready to sacrifice market share game, but to make sure that whatever is existing, they do it pretty well. So clearly gives pricing power to the industry. So yes, from an Indigo's competitors' point of view, it is good. But yes, I think this is not great for the industry overall. I think it needs to be rationalized pretty well going forward.
Just thinking, Mayur, would it mean that apart from crude, there could be another pressure on the P&L of all of these companies, given the fact there could be a headcount cost which will increase as well? We have seen it, of course, with other sectors as well when there is this demand-supply mismatch. Do you expect a sort of all of these lateral moves to put a pressure on the P&L further? And for Indigo, what kind of upside could it mean, at least on the top line?
So two things here. So you understand that you are entering a peak season. All your festive season is now in October, November, December. Prices are already up by almost 30-40% during this time. So from a lean period of Q2, you are entering super peak season for the aviation industry. From what we understand, the guys have already taken a 30-40% jump into their staff cost. So yes, clearly, apart from fuel, you are going to see a stretch on your cost. But you are also entering a season where you get to make an amazing RASK. So that kind of compensates this increase through additional air travel. For Indigo particularly, I think this is good news because every time a peer is in trouble, they are possibly the only ones who are in a position to take advantage because of their steady increase in capacities and the kind of benched crew that they have. So clearly they will be the key beneficiary of this.
On that note, we'll let you go. Appreciate making a quick stop and helping us understand what's the latest there. But going back to a conversation with Andrew as well. And Andrew, I wanted to kind of pan out and talk about the market as a whole, because of late we have got a bit of differentiated views in the sense. Today, of course, there was this Jefferies note talking about how one should probably become a lot more cautious and move into cash. They're actually talking about being a lot more negative on the stock market for the very immediate term as far as Indian returns are concerned. And on the other hand, they're talking, there are others like Motilal Oswal talking about how the earnings actually has improved quite a bit, and hence the valuation is not best compared with the last 5-10 year average. Which side of the end are you? Are the markets looking expensive, or it's fair with respect to the earnings growth that we're witnessing?
Valuations have no real argument on the bull side of the argument, in that anyway, with the multiplier effect of all the government and private capex that's going on and will continue to go on for the remainder of the year, that should be a good prop, or if not a kind of kicker towards earnings being upgraded. So I'm on the valuation is not so it's not so worrying. What I think in the very short term though, given the market rise and the fact that we're kind of moving towards that overbought territory, it doesn't take a lot to kind of move us away from that scenario, which we saw in mid caps and small caps a week or so ago. So if you take the negatives out there, which is obviously, well, the Fed tonight we'll see, but that should be a hawkish pause. But with where the oil price is at the moment, the fact that the monsoons are below average, El Nino's still out there, and so forth, that there's quite a number of headwinds, both a little locally, but it's more messy globally in terms of the expectations, and really if it's that Goldilocks scenario, where it's longer in terms of holding on interest rates for higher going forward. So that's where the market is. It's slightly kind of confusing, but I think in the short term, the markets will probably due for a mild correction, and sometimes these catalysts come out of nowhere to help that happen. So not overly worried, but certainly wouldn't be kind of thinking of going to cash at this point. That's for sure.
The pressure, as we speak, still haven't seen any meaningful recovery kick in, still down 200 points. We'll take a very quick break on that note. When we come back, lots more on the markets on the other side. Let's cut across to the Mirana Summit. Atul Srivastav, Chairman Chhattisgarh Tourism Board, is currently in conversation with Shreya Thondial.
कांकेर में रुकने की व्यवस्था है, टूरिज्म का मॉडल बना हुआ है। उसके बाद फिर 100 किलोमीटर कोंडागांव जाएंगे, तो लगभग हर 50-100 किलोमीटर में छत्तीसगढ़ टूरिज्म ने अपने रिसोर्स डेवलप किए हैं जहां पर आके पर्यटक इत्मीनान से रुक सकते हैं। और हमारा जो पर्यटन डिपार्टमेंट है, ऐसे आने वाले टूरिस्ट को यहाँ पे जितने भी हमारे टूर ऑपरेटर्स हैं उनको भी ये है कि अगर आप बस्तर टूर पे ले जाते हैं तो आप हमें इन्फॉर्म कीजिए। हम पूरी गाइडलाइन के साथ वहाँ के पुलिस थानों को भी इन्फॉर्म करते हैं कि बाहर के टूरिस्ट आ रहे हैं, आप उनका केवल ध्यान रखिएगा कि उन्हें कोई तकलीफ ना हो। और जहाँ के टूर ऑपरेटर्स भी इतना ध्यान रखते हैं कि उनकी सुरक्षा का, उनको अच्छी तरीके से घुमाने की गारंटी हमारे टूर ऑपरेटर्स की होती है।
तो एक बात मैं आपसे पूछना चाह रही थी अटल जी, कि हमने बस्तर की तो बात कर ली, लेकिन छत्तीसगढ़ का जो फोकस है टूरिज्म को लेकर वो क्या है? क्या वो सस्टेनेबल टूरिज्म है? क्या वो इको टूरिज्म है? क्या वो रिलीजियस टूरिज्म है? क्या वो वाइल्ड लाइफ टूरिज्म है? फोकस क्या है?
देखिए, छत्तीसगढ़ में टूरिज्म का जो मेन फोकस है हमारा फॉरेस्ट है, जहाँ पर 44% फॉरेस्ट, 11 वाइल्ड लाइफ सेंचुरीज, 3 नेशनल पार्क, 3 टाइगर रिजर्व, 1 एलिफेंट रिजर्व। तो आने वाले समय में हम फॉरेस्ट को लेकर ही, वाइल्ड लाइफ को लेकर ही फोकस करने की कोशिश कर रहे हैं। दूसरा, ट्राइबल कल्चर, हमारी आदिवासी संस्कृति जो है, हम उसको भी एक टूरिज्म का पार्ट बनाना चाहते हैं। और अभी हमारे मुख्यमंत्री जी ने बहुत ही महत्वाकांक्षी योजना शुरू की है। आप सबको मालूम होगा कि भगवान राम का जो ननिहाल है वो छत्तीसगढ़ है, उसको महाकौशल प्रदेश कहा जाता था। माता कौशल्या यहाँ से ही गई थी। और पूरे देश में और पूरे विश्व में माता कौशल्या का एकमात्र मंदिर चंद्रखुरी है, जहां पर माता कौशल्या जी का मंदिर बना हुआ, वो भगवान राम को गोद में लेके बैठी हुई है। और ये पौराणिक कथाओं में बहुत सारी ऐसे पौराणिक चीजें मिली हैं, बहुत सारी कथाएं मिली हैं कि भगवान राम के 14 साल के वनवास में उन्होंने 10 साल छत्तीसगढ़ में गुजारे हैं। तो हमारे मुख्यमंत्री जी ने एक पर्यटन विभाग को एक नई जिम्मेदारी सौंपी, राम वन गमन पर्यटन परिपथ। ये करीब छत्तीसगढ़ के नॉर्थ कोरिया जिले के सीतामढ़ी, जहाँ कल ही भगवान राम के पूरे उनकी मूर्ति का अनावरण हुआ, हमारा सेंटर बना, कल मुख्यमंत्री जी गए थे। तो वहां से भगवान राम छत्तीसगढ़ में एंटर किए थे और पूरे छत्तीसगढ़ में 2260 किलोमीटर होते हुए जो साउथ छत्तीसगढ़ है, कुंटा, वहां रामाराम करके एक जगह है, वहां पर भी अवशेष मिले हुए हैं कि वहां पर भगवान राम, सीता जी, लक्ष्मण जी वहां पर रुके थे और वहां से वो साउथ की तरफ, श्रीलंका की तरफ निकले थे। तो उस 2260 किलोमीटर को हम लोग ने विकसित करने का बीड़ा उठाया है। उसमें हमने 75 जगह चिन्हित की हैं जहां भगवान राम के, उसमें से अभी 75
and all these 75 places will be developed.
Yes, out of 75 फर्स्ट फेज में हमने 10 जगह लिया हुआ था, उसमें से 10 जगह का विकास हो कुछ जगह, उसमें 8 का उद्घाटन, 8वें का उद्घाटन माननीय मुख्यमंत्री जी ने किया है, जिसमें सबसे बड़ा चंद्रखुरी है। भगवान माता कौशल्या का एक तालाब है, तालाब के बीच में उनका मंदिर, उसका पूरा सौंदर्यीकरण किया गया है, रायपुर से 17 किलोमीटर दूर है। दूसरा स्थान जो सीतामढ़ी मैंने आपको बताया, उसके बाद एक रामगढ़ है जगह जहां पर गुफाएं बनी हुई हैं।
Okay, so that was the Mirror Summit currently underway in Chhattisgarh, but shifting focus back to the markets. And Andrew, one stock which is doing very well for itself in the trading session today, bucking the trend, is Blue Star. One would have not expected that kind of a reaction to a QIP of 1,000 crores, and that too happened at a discount to the current market price at around 784, while the stock is right now at around 908. Yes, on valuations, it is still cheaper than Voltas, which is almost 45x forward earnings. Even Havells as well as Whirlpool, which are at 55x versus Blue Star, which is at 41x. But your take as to what's happening in Blue Star and the sector?
Well, the sector is obviously still grappling with a slowdown and margin compression. So, the market's expecting that to turn around, going forward. But it's given those valuations that you've mentioned, it's going to be a hard task for the whole sector to move forward significantly. In my view, I think the stock you mentioned is obviously because of this QIP has got more attention. And obviously, what we're hearing in the market that there's some strong demand from the long-only fund managers, so that's what's pushing up the shares, and obviously maybe people haven't got what they wanted, so they're picking up in the market ahead of that. Getting those shares from the QIP. So I think it's a one-off. I don't think it's anything's really changed in the company's fundamentals and for the sector overall. So can't say it's a sector which I'm really kind of overly kind of bullish on at the moment. It's something that is there, but it's not really exciting.
Right. Let's check in on the new kid on the block. That's RR Cable. Let's see what it's currently at. Of course, it listed at a fair amount of issue price, premium to its issue price, about 15% or so, and still going strong. 1,200 bucks is where that stock is. There's also Polycab too, which is a big mover today. About a 2.6% uptake is what you're seeing. Excuse me, on this name. There's Lalpath Labs, M&M Finance, AU Bank, Power Grid. These are all spaces and stocks which are floating in the green as we speak. Actually, a decent follow through for price action from last week for an M&M, for a Tata Motors, for an ITC and Axis Bank as well in trade. But Kunal, the one stock that I just want to flag off, Coal India, and I think you talked about this as well in the morning, right? Going very strong today.
Yeah, looking quite charged up, and I think the 2 weeks back, the price action which had happened for Coal India when it moved from 240 to 280 to 85, that was not a one-off move for the stock price, because that there was the entire previous week the stock remaining into a range, very tight range, I think some 8 or 9 points range for Coal India after a 40-point up move, and then this week you seeing the stock getting into a breakout mode. So I think that augurs really well. It's a low beta stock, slow moving stock, and I think for a slow moving stock like Coal India, if it tries to show such kind of a strongish pattern where it rallies up higher and then consolidates in a very tight band, that's actually considered to be quite attractive, and hopefully it could probably change the behavior of the stock price from being extremely low beta to maybe moderate or slight high beta for itself. But I would probably expect Coal India in this move should hit or cross that level of 300, which I think it's not done it over the last maybe 2-3 years or so.
Okay, so that's about Coal India. But Andrew, in fact, the power and power ancillaries, the entire space is quite excited, whether it's the generators itself, the likes of SJVN, JSW Energy, etc., or the industrials, Thermax, Coal India, and the rest of the pack as well. Do you think that the rally is not over yet?
It probably has a little bit more to go. It's been a sector which has been, I'm not saying ignored, but it's been lagging. And obviously, with some of the demand factors which are coming through, particularly for August, it's kind of had the extra fillip for the whole sector in the short term. But I think this is probably more seasonal than anything else. So I think we've probably got a little bit more to run. But again, I'd probably just be renting the sector rather than wanting to own it at these levels.
Okay, Andrew, great to have you on the show. We'll let you go on that note. Thanks as always for taking the time out. Let's take a very quick break. Let's also hear it out from Sanjeev Prasad. What are the sectors that they're overweight and underweight on right now?
Quite positive on the longer term story of more spending by the government on defense capex, more international taking place. We should all be positive for defense stock. A lot of good news, and more is actually getting priced in. So that's a limited point we're making out in many of these reports that we have been putting out, that we are not comfortable with the valuations. It's largely in the financial sector. So whether you look at the large cap banks, mid cap banks, and BFCs, or small caps, that's the only place where we see some value. Otherwise, consumption names are still very expensive. And the underlying environment for consumption is actually very, very weak. You have seen the numbers and the commentary from companies over the last 3 quarters. I mean, really there is a struggle as far as consumption is concerned.
With closing trades right here in ET now, pretty much at the session lows, just about defending actually that 19,900 mark as we speak right now. Today, of course, you could blame it all on HDFC Bank and Reliance Industries. But having said that, the rest of the market as well is in the red. So even the broader end of the market for that matter, cement, metals, chemicals, realty, telecom, oil and gas, all these sectors are weighing heavy. So there's the JSW Steel, BPCL, HDFC Life, Dr. Reddy's, Adani Enterprises, Adani Ports, Ultratech Cement, Maruti, IndusInd Bank. A large chunk of the Nifty constituents outside and X of HDFC Bank and Reliance are also feeling the heat. Anand Tandon joins in on the show right now. But before that, I just want to quickly take in a comment on the index from Naresh. well. Naresh, we've breached 19,900 now, 19,896. What next on the cards? What levels do you watch out for from here?
So the view on the indexes, we are seeing today the fall purely due to the two heavyweights. A large part of it is coming out from HDFC Bank. 19,800 is the base for the Nifty, 45,000 for the Bank Nifty. That is the point of time. As closer to that, you want to initiate a buy. So overall, the bias remains positive. We went into a new all-time high. Some bit of jitters around this place would be normal. It's only when we start breaking 19,600, 19,700, that is where the trend changes. So for now, it's a buy on dips closer to 19,800.
Okay, so buying on dips is what is being recommended by Naresh on the index itself. Let's take a look at the movers. Is there any other name which is popping up? Of course, RR Kabul has seen a good listing, 16% higher. SJVN is high by 7%. Shipping Corporation of India, Chennai Petro, Nazara Tech. These are some of the names which are gaining in the trading session. On the losing side, it's PSU banks all the way. So UCO Bank and IOB, Punjab Sind Bank, Central Bank, all coming under quite a bit of pressure. But we also have Anand Tandem joining us on the show. Anand, let's begin by discussing the auto sector, because off late it's been doing quite all right for itself. We spoke with the management of Bajaj Auto today, and they're talking about how demand has seen a solid pickup from the months of July, August onwards. And for now, they're saying that demand is fairly broad-based across rural as well as urban India. But within two-wheeler space itself, what would you go for? Would you go for the mass themes, the likes of TVS, Bajaj, Hero, or is the premiumization which is going to be at play, maybe a Royal Enfield?
Well, frankly, I would not go for two-wheelers in the first place. I think the valuations for most of these companies are, 50 to 60% higher than they have been at a time when they should have been doing at a time when they were doing very well a few years ago, compared to what they are doing today, where they are still struggling to achieve growth, and where the competition has actually doubled up quite considerably because of technological changes and new companies which are unlisted coming in and becoming significant players, for example, in the EV two-wheelers. So with a more clouded outlook for the volume itself being lower than what it used to be, and a valuation which is, like I said, a 50% premium, there doesn't seem to be much of a case to be made. More importantly, I don't think that they are at least Bajaj Auto is expecting to see a widespread growth in terms of significant recovery in the festive season, which itself is not particularly exciting. So if you have to be absolutely in that area, again, the premiumization is definitely a longer term theme. But that said, again, the number of new players that have come in and the new vehicles that are being launched will automatically put a kind of a spoke in the wheel, as it were. And therefore, I would expect that it will be a while before the market shares, etc., settle down there. Broadly, I'm not very bullish in that sector.
Just earlier today, we chatted with Rakesh Sharma from Bajaj Auto, and he says that they're actually witnessing a turnaround in terms of retail sales in the quarter gone by, as well as the early signs that they're seeing in this quarter too.
Quarter one and quarter two, July and August, have seen a little bit of a turnaround in retail terms compared to the previous year. Till about quarter four, the industry was still in decline. But towards the end of quarter one, and then certainly in July and August, we have seen an uptick in the industry. This is, in our opinion, being driven by the top half of the industry, which is the 125cc plus segments, which constitute almost 50%, a shade under 50% of the industry. That is growing at a faster pace than the bottom half. The demand at this point of time seems to be evenly spread across urban centers and rural centers. Retail financing is progressing very well. We are seeing tenures of loans going up, which is a very good indication, because that suggests that people have confidence in a continued stream of income based on which they are taking longer tenure loans. So I would say that the curve has sort of turned around, and now we are looking directionally upwards. But I would say that we are still in middle single digit, 6 to 8% growth levels in terms of retails.
Okay, so that was the commentary coming in from the management of Bajaj Auto, just taking stock of what else is happening in the market. Actually, not a whole lot. There are some of the other banking names like AU Small Finance Bank, which is perking up. But, Anand, what's your take on AU Small Finance Bank? Because this year, the stock hasn't done much. In fact, saw quite a bit of reversal because otherwise it was on a one-way up move.
Well, we've just heard a lot of commentary since yesterday on why HDFC Bank has suddenly become a sell. And that's a bank which is trading at 2.5 times or around less than 2.5 times 1 year forward book value after the adjustment. And it still will generate, it will have 1.5% lower ROE, but will still generate an ROE of about 16%. Compare that to AU Finance Bank, which will have half that ROE and perhaps the same amount of price to book. I don't suddenly fail to see the attraction for buying such banks, which are so small that any kind of a problem or volatility in the market could actually change their profile quite significantly as far as their asset side is concerned, and no particular advantage in terms of the liability profile either. So I would still argue that if you have to be in banking, and obviously we have seen the best in terms of NIMs behind us, but I would suggest that the earnings will still continue to grow from here, and that is perhaps one of the few sectors which can actually demonstrate reasonable profit growth over the next, let's say, 6 to 8 quarters without spoiling up the balance sheet by any significant amount. And at the same time, trading at valuations which are not that expensive, then just stay with the large banks rather than try and be very adventurous in this market.
Just looking at the oil sensitives as well, Jefferies came out with an interesting note on the oil and gas sector, and they've talked about OPEC plus production cuts, the low US inventories, which is likely to keep oil prices elevated according to them. We're already hitting that 95 mark on Brent. Reliance, they say, is limited impact. The city gas distribution companies as well will have a limited impact of this. GAIL, of course, stands to be a beneficiary of high oil prices, and OMCs are going to see a cut in their margins and EBITDA as well. That said, let's just revisit. Of course, Reliance has been a rank underperformer today, but let's see how bad a hit it is turning out to be for the OMCs today. So HP, BP, IOC will just come up for you on your screens next as well. Kunal, is there scope to short these stocks further, the OMCs, or any of the oil sensitives for that matter?
Yeah, I think OMCs could be a good short. BPCL could be a good short. I'm not sure whether IOC could be a good short because the stock is still into a range. 90, I think, is a support for the stock. It's been a slight outperformer. I would not say by a huge margin, but at least in the last 2-3 months, when there was this recovery for these OMC stocks, IOC managed to outperform the other two peers, BPCL and HPCL. So I think on the way down, maybe I think IOC could be a bit more resistant in terms of breaking below its support. I think BPCL could be a stock which could show signs of weakness. Even on the way up, BPCL had shown a lot of underperformance with respect to the price gains. So I'm sensing that maybe this time around it could be a good shorting opportunity from current levels. And what we're looking out for is not a major directional change, but even if it's a 5% swing, which means 335, 336 could actually be a decent target for HPCL.
In fact, on that note, let's get in some buzz on the other buzzing stocks in trade and across the dealing rooms as well. Let me take it across to Sharad and find out why Nazara Tech is doing so well in an otherwise weak market. Sharad?
Well, yes, in focus we are having Nazara Tech, and what we are hearing from dealers is buying is seeing in two counters, the HNI counter as well as select DIs as well. If you look at the volumes also, that has spiked up, coming in at almost 2 times its 30-day average. The stock itself has been on a tear. From July lows itself, the stock is up more than 37%. Recently, two important institutions, first is of course SBI Mutual Fund, and also investor Nikhil Kamath had invested in the equity of the company and they had acquired stake in the company. And currently the stock itself is also trading, however it's all the daily moving averages. Now also the company will be meeting astute investors and marquee investors in an important meet by JP Morgan. The investment summit is scheduled to happen on September 28 as well. Now the recent fundraise itself, the street is expecting that the company will be using these funds for organic as well as inorganic expansions, and also importantly they will be actually infusing funds in two of their businesses, which is the freemium business as well as the gamified early learning segment. So this is the buzz coming in Nazara Tech.
We'll watch out for Nazara Tech, of course. The stock today is up almost 5% on good amount of volumes as well. But Anand, the other space which has been seeing quite a bit of traction is the entire real estate pack, whether it's the Mumbai players or the DLF, the DLF and the NCR players, or even the one down south. All of them have seen quite a bit of re-rating this year. Do you think the bulk of the rally is done and it's time to take some chips off the table, or do you expect the rally will have more legs to go?
Well, real estate kind of business is something that is a requirement for most people, and therefore there is a long-term demand for it. Now, that said, obviously, it's a highly cyclical industry, and like any other asset, as prices go up, suddenly people discover that they are losing out, and they suddenly jump in and buy the stuff. What we have seen is that in places like Bangalore and even Gurgaon, for example, for the longest time there was hardly any demand, and now as the prices have started to move up, the demand is such that there is not enough supply in the market. So this kind of cyclicality means that you have to be careful about when you are looking to buy, especially if you are looking to, if you're buying the property, it is okay because you're looking at it as a consumer. But if you are looking to buy the stocks, you have to assume that when the market is really doing really well, that's not necessarily the best of times to jump in, because you would have much of this booked. So you will, of course, have the advantage that over the next few quarters, these companies will continue to report good numbers. But in terms of the pipeline, I think it is going to become more and more challenging to be able to find buyers as the price goes up higher and incomes don't keep track. You've had a situation where the purchasing power vis-a-vis, from a mortgage perspective, was one of the highest till, let's say, about a year ago. It is not the case anymore. I think there is probably some more legs to go, but it is now not something that is, buy across the board. You have to be a little more selective about the micro geography of the areas that you are looking to buy.
Incidentally, this morning we were chatting with Ashok Tyagi as well from DLF, and he was talking about some of the premium, extremely high-end projects that DLF has recently launched, and he says that demand is actually extremely robust, much to their surprise, even when it comes to the utmost premium segment of real estate in Delhi NCR. Let's hear out what he told us.
Market is looking pretty strong right now, and it's really, it's across segments from the super luxury, premium, if at all there's been some slowdown, possibly it's been on the lower end of the market because of the increased EMI rates, etc. But really, most of the premium and premium plus categories where we typically operate in are actually very strong. The demand has been strong. It's braved the interest rate cycle. Hopefully, now that we are at possibly the fag end of the interest rate hike cycle, things are looking even more sort of, stable going forward. I think at least there is possibly, despite the inflation, I think there is clearly a greater sense of optimism, at least in the upper middle classes and the classes beyond them, for sure, which I think is one of the biggest reasons driving this entire housing boom. The second thing, of course, also, which is very important, is that the supply has shrunk. In each micro market, really, if you see, the supply is basically now coming from the 6 to 8 big organized players.
Okay, from real estate, let's talk about pharmaceuticals now. And at ET Now exclusive, we seem to gather that there is a new twist in the Cipla promoter stake. In fact, we learned from reliable sources that Blackstone has actually pulled out of the race. In fact, my colleague Anurag Joshi joins in with more details. Anurag?
Yeah, that's correct. So Blackstone has pulled plans to acquire 33.5% equity holding in Cipla, which is held by the promoters of the company. That's the Hamid family. The key reason why Blackstone has pulled out from the race is because it perceived the purchase cost for Cipla, which is said to be around $7.3 billion, to be too high. Blackstone had put a non-binding bid for the stake in Cipla. So that now leaves a key contender, which is Torrent Pharma, as a contender for the promoter stake in Cipla. And Torrent Pharma is scurrying to put together a private equity consortium. They're trying to bring in additional investors into the deal because the deal size, the sheer size of the deal, which is over $7 billion. They've tied up $4.2 billion of financing. This is what our sources are telling us. That includes a $3 billion syndicated loan, and $1.2 billion will be a promoter financing, which will be loans against the pledges of shares in the Torrent Group companies. The third contender, which is also looking at the deal, is Dr. Reddy's Labs.
Thanks so much for joining us, Anurag, with that latest. So that's about the Cipla deal, and seems to be that Blackstone has withdrawn its plan for buying the founder's stake. But shifting focus away from what's happening in the pharma space, and quickly, Anand, I wanted your take regarding escorts as well. There was this news flow today that the company is now looking at foraying into the NBFC space as well. They've allocated around 200 crore rupees for this. Looks like it's the new fashion in town per se, because Bajaj Auto also said that they're setting amounts aside for coming out with an NBFC to fund the Bajaj two-wheelers, and now this one is coming in from escorts. Your view?
I wish manufacturers would remain with manufacturing and leave lending to people who have been doing lending. There is no doubt that it will initially, any kind of funding that you would provide to your dealers in terms of selling it may initially perk it up. But then remember, there are any number of NBFCs and banks which are willing to lend to credible buyers at a reasonable price. It's a very highly competitive market. I don't think auto financing of any nature requires any additional new players to come in and join. And the feeling that you're not able to sell or increase your market share, perhaps because somebody else has a better financing, I think is kind of little perhaps mistaken, because I don't think that anybody really cares about who's actually providing the money, so long as the product is well priced and the product is something you want to buy. So I wish they would actually focus more on what their core business is and leave the financing to the financiers. But unfortunately, as you said, there are people who think that they want to do it. Will it make any major difference at the size that we are talking about? Not really. But we'll have to see how it goes. But I don't think it changes materially either way the prospects of the company.
So does it materially change the prospect, and don't see much synergies out of the vertical integration that the company is likely to do of its, financing its products as well? But let's take the BTST idea from our technical experts. Naresh, what's the trades that you're spotting as a BTST recommendation? So
both names from the PSU side. First is a Bayan Container Corporation. The stock has given a short-term breakout above the 735, 740 mark. Could see some follow-up. Stop loss at 734, target price of 760. Second is a buy on NHPC. The stop loss at 54.50, target price of 58.
What about your strategies?
So I'll go with a buy and a sell. First one is a buy on Concord. The stock has confirmed a breakout above 740 mark today, so would suggest a target of 765, stop loss at 732. And second will be a sell on PI Industries. This is more of an hourly chart breakdown. The stock has broken below its support of 3,500, 3,550. So would suggest a sell with another 120 points on the downside expected, 3,400 as a target, stop loss at 3,555.
Okay, that's a take coming in. Anand, have you tracked the recent IPOs, if at all? Today, RR Kabel saw quite a bit of stellar listing, open almost 11-12% higher. Do you think this could be the next Polycab? And I also wanted your view about Yatra. Today is the last day of subscription, and it's been fairly tepid so far, just around 50%.
Well, frankly, I don't track the IPO market very closely, but Kabel is definitely a well-known brand. So will it, be able to create enough of a buzz to be able to trade, given the fact that the particular segment that they are operating in is actually, for whatever reason, being traded at very high valuations? To that extent, I think they will also be beneficiaries. But my approach to IPOs is that I would rather look at them after a while, once we have seen how the companies react once they've got listed, not only from a stock market perspective, but in terms of their reporting. Most companies end up adding up their numbers pre-IPO so that they can come in looking good, and the adjustments are then made post-IPO for the next year and a half. So you will often find that companies will actually report weaker numbers in the years immediately after the IPO. I would like to see how companies behave before actually taking a bet on them.
Okay, Anand, great to have you on the show. We let you go on that note. Let's just take stock of where the market is settling in at, because we've reached that 19,900 print for the Nifty spot. 19,981 is where we're shutting shop for the futures as well. And that's a good dip of about 200 points. In fact, HDFC Bank is closing in with almost a 4% cut today. That's pretty much closing in at the lowest point, 1564 on that stock price, along with Reliance, which has also seen a fall of over 2%. That's been the kind of cut that we've seen on RIL as well. Kunal, let's just revisit RIL and HDFC Bank, considering they've single-handedly damaged the Nifty today.
Well, it would not be jumping in to buy these stocks even after such a kind of a correction, because generally we've seen historically that after such a kind of a correction, we expect a follow through on the downside. So it will be probably, it could be a meager correction, but another 2% odd, 3% odd correction from current levels. So 1530 approximately for HDFC Bank, and I think closer to 2300, 320, I think would be a better zone to buy Reliance Industries.
Okay, so that's the take coming in on Reliance Industries, not rushing in to buy the dip that we are seeing today. But just wrapping up for the day, and it was a cut of almost 225 points that we have seen on the Nifty. The advanced decline ratio is firmly in favor of declines, and most of the sectors are actually ending with a bit of a red tinge. There was a PSU banking space that was trying to hold up at the start of the session, but then given up the gains completely. Look at a UCO Bank, Central Bank, PSB, they were all down in the trading session. The worst performing sector was, of course, metals. So JSW Steel, Vedanta, JSPL, Tata Steel, they were all coming under pressure. Pharma too also succumbed to the pressure by the end of the trading session. And then, of course, you had some standout names like Blue Star, which deserve mention on account of that 16% uptick that we have seen. RR Kabul, on account of that IPO that got listed today, was also in focus, getting a thumbs up from the street. The power stocks were doing quite okay for themselves. SJVN high by around 9%. That 1.18 lakh crore worth of MOU definitely had the street excited. Power Grid has a board meeting later in the month to discuss fundraising. And then Coal India, Thermax, the other names from the entire supply chain were also in focus. JK Dyer, DAM Capital has actually initiated coverage and giving it a thumbs up. So that stock was up around 6%. Nazara Technologies did well in the trading session. My colleague was just telling you that how some of the FII and DIRs are looking at getting into the stock. So 6% higher there. Some other names include Apar Industries, AU Small Finance Bank, Karnataka Bank, Fortis. They were doing all right in the trading session, but on the losing side, it was the PSU banking names that were coming under pressure. And then some of the auto names were also on the back foot. But that was about the trading session today. By the last bell, we have managed to hold on to 19,900. But let's see what happens tomorrow.